get started. As I mentioned, is I prepared some questions, but everyone feel free to ask like maybe whatever you want, assuming that's okay. And yeah,
Yeah.
cool. Yeah, so just starting off, I mean, I think you've been an investor for a bit. I was curious, like, what was your decision to start actually investing in crypto? Because it seemed like at least a couple years ago, not that many kind of Silicon Valley VCs were that involved in crypto.
Yeah, so I've been kind of like just trading off my own PA and also like angel investing in this space for a few years. And then kind of at the beginning of the year, a couple of us at Lightspeed sort of took a step back, looked at what was going on in crypto, and realized that if we didn't double down now, then we were going to miss like a trillion-dollar industry. We actually have been investing in the space since 2013, but it wasn't anyone's full-time job. And so Jeremy Liu actually started the practice for us, and we made a number of investments kind of over the years. And then we made a decision to really accelerate that pace of investment at the beginning of the year.
That's really interesting. And in like kind of when you guys started, was there a focus on, I mean, earlier this year, was there a focus on like particular types of projects? So like you've been a big investor in FTX, but has it been more like exchanges or also a mixture of like tokens, DeFi projects, etc.?
It's a good question. We're broad investors in crypto and think that there's a lot of areas that accrue value. And so we're investors in DeFi and CeFi, and now, Web3 is just is a general term that kind of encompasses a lot of businesses across consumer use cases that are embedding like blockchain tech and also embracing decentralization. And so on the CeFi side, whether it's exchanges, the wallet, the custody, so basically the infrastructure layer and the application layer in both CeFi and DeFi, and then sort of Web3 applications.
Interesting. And when you kind of first got interested in crypto personally, like what was it that sort of drew you in? Because I know you also have a lot of kind of investments in gaming. Was it kind of like its application to gaming was the initial kind of spark or something else?
It was more around recognizing there's so much innovation in the space, and that certainly the momentum of adoption and value creation was really eye-opening. And gaming is exciting, and it got a lot more exciting once the first sort of mainstream blockchain game, Axie Infinity, kind of blew up and became a big deal. But before that, I wanted to really take a bird's eye view in crypto and really understand what are comprehensively some of the areas and some of the trends that we needed to have a play and investment in.
Interesting. And kind of going off of, you mentioned adoption. I mean, do I see like actual kind of critical adoption specifically in DeFi? Like, what do you think is actual hurdles? Because seems like before people were saying it seems to be like a UX issue, but then now I've heard kind of the opposite. So I'm curious what your take is on that.
So many issues. I mean, there's like less than 10 million users of DeFi today. I think some people well less than that in terms of frequent user. And there's so many friction points to using it. Absolutely UX still. It's really terrible experience. I don't know if people are trading like real time, but on an almost weekly basis, I'm like 50% convinced that I've just like lost a large sum of money because like some token transfer takes like 36 hours to settle or longer. And I'm like, I just like lost a lot of money and I've never seen this again. Gas fees are really, really high, and the UX is very clunky and not obvious to use at all. And that's even before we get to all the scams and the hacks and the issues with like, tokens, projects losing money from their treasury for various reasons. All of these things, I think, just demonstrate how early we still are and how much more building there's going to be in this space.
Yeah. What do you think is one of the actual fundamental reasons for there being such a UX problem? Is just because people don't seem to care? People think like if it's good enough, like people building it, there isn't that much of a product focus? Like,
I think there's a bit of like the good enough. There's also a, the first generation, I think, of blockchain devs are maybe dev purists, and some of the Web3 consumer UX sort of best in class type of people just haven't moved over yet. Before, I mean, like the first generation of DeFi apps, which by the way, DeFi is still like 18 months old, right?
Yeah.
And so you actually don't need like any great UX to have generated billions of dollars of value. And so there was also like a speed to launch was more important than necessarily like this brilliant UX. But I think that's very much changing. And it's one of the reasons why, for example, Phantom Wallet, I love the UX of it. Again, compared to everything else out there in terms of a wallet experience. And I think like as you get, and also the thing is like that the first wave of DeFi users were more hardcore users and prosumer traders, right? It's people like basically doing leverage trading on in DeFi. They're sophisticated users. Their need for specific like they need specific features, and they tend not to be like easy to use UX. They want more sophisticated other things. And so with the next wave of some millions of users, they're going to be looking for something quite different.
Yeah, I mean, is there kind of like a concrete example of something that might be different that's actually more user friendly that you've seen, or at least
yeah, like I think, like I mentioned, like Phantom is a great example of that. Like I think if for anybody who's used multiple DeFi wallets, the moment you use Phantom Wallet, I basically was like, I am literally delighted by this user experience. Like it doesn't make me feel dumb. It doesn't make me feel like I just lost a lot of money. Like I think that it's a very intuitive like feel for it, and I think it's like kind of the first of what I think will be a next generation of much more user-friendly products.
That's really interesting. I mean, I think it's, and at least to me, it seems significant that Phantom actually is on Solana, just because it is kind of a newer ecosystem. Have you been seeing like projects on newer ecosystems kind of getting at least like having a head start in terms of UX, or are they kind of going back to what initial DeFi projects were on Ethereum 18 months ago?
I don't see it as necessarily concentrating on any blockchain right now in terms of great UX. I think that we're still not quite there in terms of like having a large number of apps with great UX, and it's still a little bit incremental on that front right now. Although and you could argue that the majority of innovation happening in DeFi is still happening in the Ethereum network.
Yeah, that's interesting. I guess for you, and also just the other people who invest in crypto at Lightspeed, are there specific kind of other ones you're focusing on beyond Ethereum, or you're essentially agnostic?
Yeah, I mean, so there's like a lot of people with tribal interests in the blockchains, and you know what? If you're a seed investor in one of the blockchains, like I get it. But you know, unfortunately, we were not, and as a result, you know, I think, and again, we still think it's quite early. And so the way that we have been investing so far is that right now about 70% of all blockchain activity is still happening on Ethereum, and it's sort of like layer twos, like an Arbitrum. And so the majority of our investments have still been in the Ethereum ecosystem. We led around it the last like round in Arbitrum, which is an L2. And then we are also investors in the Solana ecosystem, the Polkadot one, and the Terra one. I have relationships with Near and Avalanche and Dapperflow as well, because like there's a little bit of you know, we're trying to get the next billion users in the DeFi, right? Like we're a long ways from there. So I think everyone can be friendly with each other before they're just dead on competing against each other. And there is a little bit of that collaborative feeling, I think, among some the different L1 communities right now, although there's definitely a good degree of tribalism as well.
That makes sense. I mean, but should these L1s be focused? I mean, because they're so early, should they be focusing on just getting developers, or should it be focusing on getting more kind of like consumer users?
So the killer apps drives users, not the other way around. So I think like the order of operations is the blockchain community, the blockchain creates a community of devs, and they need to figure out how to get developer traction and love to then build like, you know, killer apps on their blockchain, which then will attract users.
That's interesting. And when investing, like how do you view sort of like artificial, I guess you could say like artificially artificially like bumped up, like I mean I guess in DeFi it'd be like liquidity, but analogous to consumer would be like artificial amounts of users, like some I know consumer company spends thousands of dollars on marketing, and then they have a spike
There's
in.
a few definitions for artificial users, by the way. On the one hand, at the most extreme end, there are just bots that are actually just like doing fake trades that are that basically is artificially driving up TVL, which then makes somebody look at the TVL rankings and be like, oh, this blockchain has like a lot of traction, and so it must be valuable and getting more traction. Let me invest in it. And you're sort of like spinning this flywheel into then perhaps actually, like, if you pretend, it's basically like fake it until you make it, like on the developer on the traction side, right? Which is one way to do it. And I think some of these like low cost blockchains, it's inevitable that somebody, whether it's the actual blockchain team or another application, will do that. Then there's the like using a token for liquidity mining, airdropping, and giving grants. And like, I think that's just cost of marketing. You're going to do that with your token. I think that's like all kind of fair game to do as a blockchain. You're going to do whatever you can, right, in order to attract a great developer to build on your platform. And so if token is that a weapon of your choice, like, then go ahead and do it, because again, it's like one thing you can do, right? But I think ultimately what I observe is that just throwing money at a project is just one element to it. Like, people, for example, choose Solana to build on, even if they offer $0 over somebody else, like a flow, because the community is honestly really special, even though today it's still a lot smaller than the Ethereum one. Like, it just feels like a close-knit like community where people are helping each other at this point. And so that's the reason why people are selecting that blockchain necessarily for the grant. And so I think it's helpful to maybe jumpstart that flywheel at the very beginning, but ultimately you have to have an authentic community.
That makes sense. I mean, are there certain metrics to kind of judge that, like the community is authentic? And I mean, and perhaps like, I mean, I'm sure there are existing metrics for that kind of like typical consumer space. So is there any crossover?
It's really difficult. I mean, so as funds look at various things. You can obviously look at TVL, but like I mentioned, there's fake trades, right? So TVL will only help you to a certain extent, because but that's not the leading indicator, right? The leading indicator is how many developers are developing on the platform. And this is where having a pretty close feel with the developer community in DeFi is starting to, it helps you kind of gauge like where is momentum building. And some of these crypto funds will actually look at on-chain activity to try to calculate that as well. But really, I think it's a very qualitative assessment, and it is a little bit of a word of mouth part to it.
No, that's really interesting. And how does actually Lightspeed in general kind of compete with these more like quote unquote like crypto native firms that do like stuff that you mentioned? They have a lot of engineers that come in, engineers and researchers who actually work with the protocols directly. Like, how does Lightspeed compete with
There's
that?
various ways to add value. I think one of them is on-chain developers, which we're hiring as well. But we also have been like in the company building business for 25 years, which most, like, none of these crypto funds have this sort of like experience. And so we typically find that we will partner and co-invest with like a crypto native fund, but actually add very complementary set of sort of like help. I like with Solana, for example, Solana Arbitrum, right? Two, you could arguably competing blockchains, but really kind of just like one focus on kind of different use cases. Arbitrum more, and I talk to both teams on a daily basis. And in various ways of helping their communities out, making introductions. And the introductions, also we're capable, because we're a generalist VC fund, we can introduce them to the social network community, the gaming community, the like sort of financial services, Fortune 500 companies, a lot of different players.
Interesting. What was I about to ask? Sorry, I just forgot my question. 1 second. Okay, sorry. I'll maybe come back to if I remember, but it's like, so like you have had a kind of like noticeable role in kind of FTX and like the FTX ecosystem. I mean, I don't know if this is the correct characterization, but I feel it almost as like one of these kind of like conglomerates or sort of like loose coupling of products. Do you think we're going to see more of that in crypto? Like other companies kind of taking a similar approach where they might focus on one chain, create kind of like accessory products, but it all fits in this broader like FTX ecosystem or some analogous ecosystem?
It's a good question. Right now, there's multiple ways to sort of play that, right? I mean, CZ has, the CEO of Binance started his own chain, obviously, Binance Smart Chain, and it has a very large ecosystem. It's the second largest blockchain community right now after Ethereum. Some kind of losing momentum, I think, but as others have come up, alternative L1s to compete against it, but it's still number 2. And, FTX made the decision to actually partner closely with Solana. And so they have a really close partnership. They have a lot of ownership of the network. And so they'll be really helpful where they can. At this point, I think they were a much bigger part. They played a much more heavier decision maker role like earlier on Solana's lifetime. Now there's 400 applications developing on the blockchain, right? And so it is quite it is quite its own thing now. And at the same time, FTX is also extending and building collaborations with other blockchains as well. So for example, they're investors in Arbitrum, they're investors in Starkware as well, in Ethereum, because ultimately, as like a major global exchange, they basically need to have rails across different blockchains.
Yeah, no, that makes a ton of sense. Terry, go ahead.
Yeah, sure. So I saw one of your tweets that said, I think you mentioned that every single sort of project that you've seen involving gaming has involved some form of another, like in NFTs or like backend blockchain integration. I was just curious, like from the ground, from over there, like what's the level of interest and what do you think is like your timeline for like mass adoption of NFT gaming?
Oh yeah, I think we're years from it. Like I truly think we're years from it. I think within 18 months we will see a couple of AAA titles do NFT drops, but I think it's going to start from, at least from conversations, it's going to start from like a pretty surface level, going to do NFT like skins. I'm like, great first step. That's awesome. Like that's kind of the first step into sort of weaning like the much more mass market like audience into what is an NFT. Like most people still have no idea what that is, right? I think when like Axie Infinity literally just blew everyone's mind in terms of how big it is. But I think it's like first gen blockchain games, right? Super happy for the team. They've made a ton of money, like generated tons of value, also absolutely trailblazed. But I think that we're maybe years away from seeing kind of like from the grounds up built natively integrated blockchain tech with like a AAA gaming experience. Years, because it actually takes something like 4 or 5 years to develop a AAA game. And if you can imagine, people start doing this like earlier this year. And so they're still like in the game development cycle. And that's great because by then I think the blockchains will have scaled up their backend tech to actually support some of this. Can one of these blockchains actually support 100 million players right now? Absolutely not. Like absolutely not. And when it comes to like full game on chain, but that's why it's like, they're gonna have a couple of years to get there in terms of scalability. And but in the meantime, like they can support, wide scale NFT drops.
I guess just on that note, like do you see adoption coming more from like Fortnite and Roblox having NFTs and then running that transactional logic of those NFTs on say Immutable, or versus like a Star Atlas and then like Illuvium coming out with all of their game running on a blockchain and just starting?
Yeah, so, okay, I'm gonna break that down to a couple of things. One, by the way, on a separate note, I don't think Fortnite nor Roblox are going to be the first to drop NFTs. There are like much more blockchain forward, like gaming, publishers out there that we're gonna see in the next 18 months. On a separate note, like, but I think like they have 100 million MAUs. For either Star Atlas or Illuvium to actually get 100 million MAUs of a game, they will have needed to like build something truly spectacular. I mean, even like Axie Infinity is just like hand over fist making hundreds of millions of revenue per month, have 2 million DAUs, which is actually insane on a different level. But to reach like mainstream level gaming success is truly difficult. And like, I think that is going to take some time. Like maybe it's the Star Atlas and Illuvium team. I would argue they would really need to build out a pretty significant gaming team in order for them to build something like that. Both of these games are actually early on the, like I know both teams, like they're quite early still in terms of the game making progress.
And I guess just one last question is, then how do you think about identifying like the right games on your end? Or would you say like
So I think it's like truly kind of like investing in like Web2 games, which is, I think if you have taken some like hundreds of game pitches and play tests, maybe I can have a sense of what the top 10% looks like and feels like, right? And from like a quality of game making perspective, are they designing something on trend? Does the game maker have the chops and to develop something truly spectacular? And by the way, for all of that, I could like everyone could still be wrong. So for example, Splitgate, I don't think anyone, including that team, could have predicted their massive success when they launched on console. It wasn't a success when they launched on PC. A lot of things came together for it to be a success on console, right? Gaming team had no prior experience. Literally, the founder started Splitgate right out of college. So again, like totally antithetical to what most gaming VCs would be looking for. And so like what they typically look for is you play the game test, you have a feel for like, okay, this is probably within like top, I don't know, like 5-10% of like games out there based on just caliber of team and everything together. And then I would say that you still can't tell whether a game is going to be a hit or not. It is just totally random, like an absolute random element to what goes viral. And therefore, I think the way to actually invest in games is a portfolio basket perspective. You invest in like 12 to 20 games and you hope that like a couple of them will be hits. And actually, I think the majority of them will fail upon launch, just like it has been for the last like 20 years of game making, right? And I think there's an element to that with blockchain games. I think what I don't know, and I think what like a lot of people don't know right now is my hypothesis is that you can make, again, like hundreds of millions of dollars from NFT drops if you are a Web3 native gaming team that really knows how to build a community and knows how to drive like scarcity and momentum for an NFT drop. But like at some point the team will have like independently become rich, and maybe they never need to launch this game, and everyone's been happily trading NFTs for like years, like off of that concept and IP, right? Like, and that might be in itself a form of quote unquote success, but to be a successful blockchain game, you still need to know how to make a great game. And I think that's kind of like the wild card.
Yeah, got it. Awesome.
But great questions. You guys have like really deep questions. I'm really impressed.
I know you can go ahead.
Yeah, so we've been talking about Solana a lot and bit of a switch. So I was listening to an episode of Block Crunch with Jason Choi and Kyle Samani, and we've had a couple multi-coin portfolio people that have come in. Specifically, I'm thinking of like Helium or Audius.
Oh yeah. Oh, both
And-
awesome. We're also investors in Audius. Wish I was an investor in Helium.
But anyway, like one thing that kind of like stood out to me with Helium, I didn't know much about it before, but how they kind of like use token economics to bootstrap a lot of their like real world activity. And it's kind of, I mean, like they use hardware, which is not as common like in this space. And Kyle like mentioned that he was like really surprised about that and how it got like a lot of like people trying to do like real world stuff and getting them involved because of the token economics. And I was wondering if you guys had any other like kind of like outliers in the sense of like those aren't like your AMMs or like doing stuff on chain or like that type of stuff that would get people like coming in. And then like, yeah, like what do you think of like using token economics? Because like you said, a lot of this stuff like the UX is really bad. Like most people like don't use it day to day, that type of thing. And like I hate to say it, but a lot of people just get in because
A speculation. Yeah, the
exactly.
prominent use case of crypto today is trading crypto for speculation. It's a fact.
Right.
I think that we're still in the early innings of real world use cases of blockchain. I think that Helium is one of like very few use cases in which they're actually like, it's like a real use case for crypto, like of token incentives. In fact, even us in talking about that company internally, we were like, it's one of the first real world use cases of token incentives to bootstrap, like you mentioned, like a network. And by the way, like basically people have been trying to do something like Helium without blockchain for years, without success. But it turns out that it's a perfect, again, like example of using token incentives to create enough of a density of networking, sort of, networking capacity to then have a replacement for Verizon or somebody else, like for your Wi-Fi. I think it remains to be seen, right? Because I think the vision is, because I think if you were early on running a node on Helium, you were just like making hand over fist money again, like in terms of the ROI of like buying a box and the monthly earnings you're getting from that. I have a friend who basically made like a couple $1 million actually from just being like a Helium node hoster from earlier days. Plus, like they in addition to holding the Helium token, of which I think they have a couple, and then seeing that like accrete in value. And then as that rises in value, then of course, like the payment that you're getting from hosting that node also rises. But with more and more and more people becoming nodes onto the Helium network, actually your economics go down. It's a little bit like zero sum, right? Like, I mean, assuming that the token value doesn't have like infinite like inflation. And so at what point does it stop making sense to be a node hoster on Helium if most people are there? And because basically the people who are spending that time, they're like, what else can I be doing with my capital? Instead of hosting a node, I can be chasing the next like 5,000% APR, right, in DeFi. And so I think that transition remains to be seen for something like that kind of like token incentive. But I still think it's like anyone's guess, no one knows, right? Like, and I think it's like a super fascinating use case of crypto. And to answer your question of like where else I'm seeing it, I think I'm seeing it in some of the social token incentives for social networks. Like it's less of a let me bootstrap like supply in a marketplace or something like that. It's more of like a let me gamify this usage of a consumer app, but still a different use case than necessarily speculation, although a lot of social token use cases are speculation.
Well, like the narrative with like Web3 is like, okay, you're not gonna be the product and like give away your data and that type of thing. And in turn, like you'll pay extra fees or like that type of thing. But like most people are used to the Web2 model of like expecting everything to be free, and they don't realize that they're the product, like they're giving away all the data and whatnot. Do you think like I don't know where I'm going with this, but like would at scale would be people, would they be willing to like switch to that narrative, more like the Web3 narrative more?
It's interesting. I mean, I'll make it like a kind of a more nuanced point, which I think I was like thinking about as you were kind of describing the question, which is it would be a shame, but like a realistic future that we'll just see the new gatekeepers in Web3, right? And because of a couple of things. In the consumer side, it happens that like because of network effects, you have a winner-take-all phenomenon across different like consumer use cases, whether it's social network or like even games actually. And therefore, because network effect is not a phenomenon like abstracted from Web 2 or Web 3, I think you will probably also see somewhat of like the mega apps and like winner take most in Web 3 as well. And you see that like Aave Compound, right? Like it's really difficult to start a lending protocol now, like to compete against like, you know, those guys, especially when they're going cross chain. And so like, how do you keep these things quite decentralized? That is like this question that a lot of people are philosophically still thinking about: how to prevent this concentration of power, just in a different form in Web3. There's some decentralization around decision making and also value creation, because again, like a lot of people now have ownership of the tokens. But I would still argue, if you look at the cap table of like tokens, and almost every single major DeFi project, the founding team and a few investors own over 50% of the tokens. And so you do have this concentration problem. And so I think we're still like in this transition to kind of like the idealism of Web3. I'm hoping that we're just not going to substitute Web2 like stakeholders, the new set of stakeholders in Web3.
Great. Thank you. Thank you.
And like for going back to token incentives, do you see that, like you mentioned it, like using that to kind of bootstrap usage and more like social products, and to me, this seems like there's a fundamental difference between a user of like the Helium network, where they might be more technical and might understand the benefit of getting these kind of token incentives and being part of the network, as opposed to just like a typical person using a social app. Like, did you think there is such a difference where perhaps like an actual token might not mean much to them, or not really?
Can you explain a little bit more what you mean by difference in
Sure.
user?
Yeah, I mean, like, because if I'm thinking of Helium and like the type, like the kind of archetypical person who would set up a node or whatever they call
It's a
them.
more technical person, right?
Yeah. It's gonna be far more technical than somebody who might just
Yeah.
use a social app, and because they're more technical, or perhaps like, yeah, they might be like tangentially interested in crypto or know a bit about it, compared to like the average person who might
Yeah.
use Instagram. I see a
Right.
pretty big difference between those types of people.
So you think you're totally right. So right now, let's say there's like the universe of people that are technical and have the know-how to set up an Helium node is small and will always remain small. And until like a protocol, whether it's Helium or somebody else, figures out how to really dumb down that UX, it will remain small. And the answer might be you only need like 1 million node hosters on Helium to actually create like the next like Verizon network. I actually don't know the math to that. And in that case, maybe you don't need to like have a different experience doing that. And maybe there's a reason why you might not want more than like 1 million node hosters or something like that. But in terms of like, if you're an application that relies on like, or it's like, it's ROI positive for you to bring on 5 million users onto your platform, you have to get the UX to a point where it's like on par with the ease of use for a Web2 app. Otherwise, people just like won't move to your app.
Yeah, but like, let's say you're using kind of like using like token economics and incentives to actually get users on board.
Yeah,
And
that's true. The barrier to entry is going to be like lower, right? Yeah, like I might be willing to learn how to host a Helium node, like if I know I'm going to make $1 million from it, or like $100,000 from it, right? Or maybe that bar is even lower than that, like $20,000 from it. Yeah. So to your point, it's a good point. Like it's not necessarily apples to apples, because you're actually like paying people a lot of money. That's the beauty of like token incentives, right? To do it. Like, and so kind of the barrier entry comes like down, but I still think it's not low enough to bring on like billion people onto something if it's that hard to use.
That makes sense. I mean, I'm almost worried there could be like adverse effects of like introducing token incentives to a social product, because somebody might see it and think, okay, this product is not that legit because they're like offering to give me tokens that like may or may not have value. I don't know if that's like a real concern, but like that's just something I like popped into
It's
my
an
head.
interesting point. I feel like people just want to make money,
That's
and it's a really powerful driver in any case. And I think the bigger problem is I'm afraid to get scammed, and I think there's like probably a number of users that are afraid to get scammed, and so they're like, I don't know if I trust it because of that, not because they don't want to make some money from tokens.
Yeah, no, I know exactly. Alex, go ahead.
Great. So first of all, thank you so much, Amy, for your time. It's been super interesting to hear these discussions. And essentially, my question goes along the lines of what we were discussing earlier, that a ton of users right now are coming into the space purely because of the fact that they want to make money. And we know that everyone wants to make money, so it makes sense. But there's a lot of speculation built into it. And what I have found is that as a retail investor, it's very difficult to fully understand if there's actually intrinsic value within specific projects. So essentially, my question to you is, do you have any advice for people like us that want to invest in the ecosystem, want to get on board on the projects, not necessarily only because of the financial incentive, but also because we're excited about the ecosystem, we want to be part of it. do you have any advice to really stay
Yeah.
away from the speculation and really find those projects with intrinsic value?
Okay, I think that the reality is it's like 98% speculation, 2% intrinsic value. And that's okay, actually, that's fine. We're like in the early stages of like building, right? The question is like, there's a difference between like, how do I invest in projects like that have intrinsic value and how do I make money in crypto? Like truly, like in fact, some wise person told me that you can be right or you can be rich. And so that's why I just like want to be careful around like, I can tell you there's some things that I think will have intrinsic value. I think what Terra is building truly is like mind-blowing in terms of actually bridging to, we were first originally really excited about Terra because we're like, this is the most advanced use case of crypto. They have like, I think a few million people transacting on their platform at this point that is actually using it for e-commerce payments. That's awesome, right? Like real world use case of crypto. And it's why we were really excited about investing in that project. Intrinsic value, yes. Like opportunity for value appreciation, also yes, check the box. But in terms of, and then if you look at the blue chip protocols, like, you know, things like Aave, like Compound, Uni or Sushi, and Lido for like, you know, Ethereum staking and a bunch of other ones, like I would say, yeah, definitely intrinsic value. Absolutely. Like, you know, if you want to like trade crypto, like, and you want to do it on DEX, then that's providing, I think, intrinsic value. Then there's things like Olympus DAO or like Klima DAO and some other sort of just straight up like, I don't know, like currency engineering type of money engineering project that I think is like pure speculation. And I think it's like kind of thrilling to be part of some of this just to see where the technology and the idea goes. And along the way, you could make 7,000% APR. And I think some people will size their bet accordingly and join in the fun of it, knowing that they could just lose all their money because it's a Ponzi. But I think that's also part of the learning, actually.
Got it. Appreciate it.
Terry, go ahead.
Yeah, so sort of continuing on with that, like value protocols, plus you talked about how most likely the best bet is just to have a basket of investable games. To my understanding, you guys are investors in YGG, or at least.
I'm actually a personal investor in YGG. Lightspeed's not an investor.
Oh, got it. So you're a personal investor in YGG. So I wanted to ask, because I talked to Gabby and he said that like a core KPI of YGG is not the number of scholars or the like percent penetration it has in the scholar market. In which case, like as sort of like the investable surface or like the DAU of these games grow, like how do we ensure that there is that commensurate value accrual to YGG itself if it's not actually targeting sort of the percentage penetration of that market?
I personally think it is about number of scholars, because it is like, if you're a yield guild, then your value is in your distribution, right? Just like Roblox. I mean, Gabby will say, he's like, I'm going to be the Web3 Roblox. I'm like, okay, the power of Roblox is that they have 200 million players on their platform. That's why developers go to them to build games. And if, you know, I think that Gabby has essentially pioneered like a new form of player distribution in Web3 games. And so, yeah, I totally believe in his vision of like becoming the Web3 Roblox. And I think he's building towards that, but it absolutely is around amassing number of scholars, because again, that's distribution. What he could potentially mean by that's not where the value is because that's not the moat, right? The moat, well, actually, I take that back, because that is also the moat, because at some point you have such a powerful distribution that other games have to plug into you. Because if you're going to say, I have 500,000 players, like, yeah, if I'm a game and I'm trying to bootstrap like my demand and number of players, I'm going to plug into YGG. Like, but I think like what gives them a moat to another like yield guild? If I'm like a play to earn player, why should I choose yield guild over somebody else? It's because yield guild is giving, YGG is giving me a better experience, right? It's giving me like a better community, like a community that's going to help me onboard, figure out like, give me a set of like tools to plug into so I can just like work pretty seamlessly. That's probably the moat around like why choose YGG over another yield guild eventually.
Got it. And are you guys part of the Blockchain Game Alliance?
Actually, no, but maybe we should be.
Okay, got it. Yeah, that's it for questions of mine. Thank you.
Honestly, we should. I'd love to. Yeah, you should like DM me on Twitter, something like that. I would love to learn more about that.
Great. Does anybody else have any questions? So we're coming up in time.
Yeah, I wanted to ask you a quick one. Just with Lightspeed, I didn't know much about it, but I was checking it out on Crunchbase, and it seems like it's a really big, like firm or fund. Do you guys, with your investments, in like the Web3 space, is it typically like equity rounds, or is it more like token based?
I don't really find value to equity in DeFi or Web3. I think Web3 a little bit more because Web3 tends to have a connotation of it bridges, like, you know, sort of not, it's a mainstream consumer use case and using blockchain tech. And so in those cases, like, yes, equity plus token value. If we're talking DeFi, like projects, those, like, it's like the value accrues to the token, not the equity.
Well, like, I just had the impression that a lot of like the A16Cs and like the really big funds, like they aren't necessarily with the token, but they're like in the equity.
Any crypto fund, any legit crypto fund can trade and invest in equity and tokens.
Okay.
Yeah,
There's
actually,
a number of generalist VC funds that haven't been set up, and this is like a long conversation, but there's actually a lot of like legal consequences that there is like fund structure things that need to be set up so that you can legally trade tokens. But otherwise, like if you're like a fund investing in any sort of volume of crypto projects, you have to be able to trade tokens and invest in tokens because that's where so much of the value accrues.
yeah, I mean, sorry, just like a super quick follow-up, because like for these DeFi projects, for example, like DYDX, like there's still a lot of equity, at least, I mean, like the core team, like how does that actually have any value? Because typically like the equity gets valued either like from an exit. It's not like, that's like, where's the exit from? You know what I mean? I mean, obviously you can still like secondaries, but
Like, honestly, I don't subscribe that much equity value.
yeah.
Like almost at all. Like, you know, maybe they'll figure out something to carve out a piece of their business. I'll give you an example. Like Arbitrum has decided to carve out their non-DeFi business in the equity, right? So like their partnership with Reddit, for example, any revenue that accrues to it will accrue to equity. That makes sense to me. Like, and then Arbitrum 1, which is their Ethereum scalability L2, like that is eventually, they haven't launched a token yet, but I think when it does, then the value will accrue to that token.
Oh, that makes a ton of sense. But yeah,
So
no,
it's really different. It's really specific. I mean, like devil's in the details, right? So I wouldn't need to, I don't know like how the DYDX team would envision sort of like equity value accretion versus their token.
yeah, that makes a lot of sense. I really,
One
thanks so much, Jamie. Oh, sorry, go ahead.
Yeah, so just before we go, like, I guess besides joining a DAO, like how do you think college students should get involved and learn more?
I mean, I'm gonna start by saying I am literally blown away by like this conversation. It's like honestly deeper than conversations I'll have with other crypto VCs. So first of all, we're hiring on the Lightspeed crypto team, and you guys should definitely DM me. Like, particularly people like, you know, folks with this depth, like, you know, layered like depths of like understanding crypto. I'm truly like blown away. And like, but I think that there's so many awesome projects to work with. And if you're asking me this kind of questions, you know that like you probably have a good lay of the land of what are some of the really exciting projects out there. If you want to DM me, I'm happy to like share some thoughts around projects I really love and I think has like a great core team in order to like join. And again, you can join like a DeFi company like a FTX. You can join like a Web3 like, you know, core Web3 team as well. You can start participating in the DAO part-time as a student. Like there's a lot of different ways to get involved.